in your email.
There we go. Good morning, everyone. I didn't want to, talk to myself or to the ladies I've already been chatting with. So I was waiting to see those numbers go up. How are you, Lori?
Lauren, I think it's highly advisable to have multiple conversations with yourself on a daily basis. I just thought I would add that because I do. And then what I do is people hear me. I say, oh no, I was talking to my cat, believing that makes me more sane than talking to myself.
I was just going to ask, do you do it out loud? But you do. Okay.
I do. I actually have heard people, had somebody say to me, I hear you inside talking to your cat all day. I'm like, oh yeah, okay, that's true. But I always ask them if they hear her talk back because she does. She responds. She does meow. I do meow. I mean, it's a whole thing. And those cat lovers out there, you know what I'm talking about, right?
Really similar for those dog lovers out there. So there you go.
I know. Babu got to go to PetSmart yesterday because she goes in the stores with me all the time. Other than the grocery store, she always goes in the store. She loves Ace Hardware for some reason. But it was so funny because I had her in a backpack, but they had a low cart. So I put her in the cart and she's sitting in the cart looking at the birds. She loves the bird section. And the bird's upside down looking at her. I know it would have been a TikTok moment. It really would have been.
Well, speaking of moments, let me not steal it away. Let me go ahead and get the intro out the way so that we can start the show. We've got some fun things going up.
Yes, we do.
We got a fun guest. We've got Sadie joining us too. It's going to be a good day.
Yeah, and we got to make an announcement too. I'm going to do it during mine, but next week we're not going to have a show due to the holiday, but we will return after that. So don't think we went away. We're just temporarily delayed.
Just in time for the holidays. Oops, there we go. All right, Lori, are you good on your side? Can you see my screen?
I am.
Perfect. Let's dive in. Good morning, everyone. My name is Lauren Simpson. I am with the SBDC, or the Small Business Development Center. We are a national program with over 1,000 locations across the country, and we offer no-cost services to local small businesses. Now, our services are at no cost to you because your tax dollars have already taken care of all of our fees. Now, for the Los Angeles Regional SBDC network, you will see the locations, actually our physical center locations on the map in front of you. You'll see that we are in Camarillo, Santa Clarita, Pasadena, all the way out to Laverne, throughout Los Angeles, the South Bay, down into Long Beach. Now, technically, we cover the Los Angeles, Santa Barbara, and Ventura counties. And then those red waymarks are actual physical locations where you can connect with the center. Here's a deep dive into what it is that we do. We offer, and what we offer, of course. So we offer no-cost business advising and then virtual trainings. I'm going to dive into the business advising. So you are able to tap into a network of tons of business experts, and we have advisors who are just geniuses in various expertise. They have tons of knowledge as it relates to market analysis. If you're just starting your business, you can tap into someone who can help you create a business plan. We also have a guru of numbers. You might know her, Miss Lori Williams. And so you're able to schedule appointments with her as it relates to taxes and finances. Again, I call her the guru of all numbers because anything numbers, she's got you covered. And then we also have experts who can assist you in going from being a handyman to construction. If you are looking to grow your business or even sustain it and you're looking for some capital, we have a specialized team called the ACT team, and they help you with accessing capital. And that's just the tip of the iceberg. We have tons of other experts as well. And then we also offer virtual trainings. Now, those trainings are going to be comprehensive workshops via webinars that assist you in either beginning your business, adapting your business, or growing it. So please be sure to get in contact with us today. We are excited to get started with you and help you along your entrepreneurial journeys. You can contact, sorry, let me There we go. You can contact us at 866-588-7232. That's our phone number. Or you can go online, smallbizla.org/new client. Now, if you are outside of our service area, that means that you are outside of the Los Angeles, Santa Barbara, or Ventura counties. Please go to americassbdc.org/find your SBDC. With that, Laura, I'm going to quickly stop my screen share. Some housekeeping. Oh, I didn't even see the chat. Good morning, everyone.
I know. I even had to play, and I had to put a good morning in there. We've got a lot of people this morning.
I love
Yes.
it.
Isn't it awesome?
Yeah, well, keep it going. So you guys refer to the chat for any kind of links or information that Lori would like to share with you. And then there will also be contact information. There will also be ways for you to get in contact with our special guest as well. With that, Lori, I know you have a special announcement along with other things you're going to cover. So let me go on mute.
Okay, awesome. Well, thank you so much, Lauren. Okay, so today on our Mythbusters, I am going to begin a conversation that I'm going to continue after the holidays on different aspects. So I've got an interesting title for you guys: In Praise of the Lifestyle Soul Prop, and the future of your company is dependent upon your decisions in the present moment. Now, I know this is a little bit of a stranger statement that I'm making than the typical finance or tax statements, but it's very packed concept for you to understand, and I'm going to slowly unravel it for you. So I'm starting out by saying in praise of the lifestyle soul prop. Now, what I find, and I've spoken to you guys many times about this, is the need to everybody think that they have to be a corporation or they have to achieve this. And I hear a lot of times, I wanted to become an LLC or an S Corp to be a real company. And I say, real company, what does that mean? Why is it that a registration with the Secretary of State to be a corporation identified you as a real company when you were not as a sole prop? There is absolutely no logic to that whatsoever. I think if there even was a definition of a real company, I don't think that's a definition, but if I was to apply one, I would say a real company is a company that is providing you the net income, the income to experience and live your needs, wants, and desires. Needs, the basic need to what I always say, buy a quart of milk, cover your personal expenses. In that, the need is no different than when you accepted a job at one point in your life as an employee. You needed a certain salary in order to pay bills and have the lifestyle you desired and wanted, right? But you at least needed enough to pay your expenses so you could live. Well, having a company does not change that dynamic. That need does not go away. So often people separate the decision to go in business and the financial requirements for the company, especially at the beginning, with what they actually need to live on, feeling like it's going to mysteriously just all work out and you'll use your credit cards and etc. This does not always yield the best results. But so what I'm saying in this is that, first of all, let's not define a real business by whether or not you're incorporated. That is a legal decision based on risk assessment and to some degree taxation and tax benefits when you reach a certain amount. Approximately 80% or so companies in the United States are sole props. And many companies, most companies, are lifestyle businesses. Lifestyle business means you're creating a company that is supporting you personally, and maybe kids will take it over, but you're not planning on selling it to someone else so they can franchise it or it goes out public and all that. That is like saying, okay, I'm going to only play an instrument or sing if I'm going to be a rock star and be seen all over the world. It removes the love and joy brought by locally singing in your community or playing an instrument or playing in a little club. So in other words, when we think about musicians or actors, we know that many experience being an actor or being a musician without being somebody that has a cover album and everybody knows. And so there's a whole depth of that we understand. Well, the same is true in businesses. So in that, we want to maybe have a dream of letting it go someplace, get someplace, but we want to start that dream here and now. Hence, the future of your company is dependent upon your decisions in the present moment. What happens is when we look back at a company, whether it's a successful mom and pop or what have you, it incrementally grew throughout the days, weeks, months, and years. They opened this small area, then they got more customers, then they found out this product really sold, then they found out, then they did this, then they hired someone. That is how companies grow. Historically, we know that, but many people in their small business are starting to make decisions today based on a potential future that may not be. Well, let me go ahead and get this amount of extra rent because someday I may not hire somebody. Someday may not come, and that extra expense may cause you to actually close down because you can't afford it, stopping that someday from coming. So I am not saying it's not important in person and business to forecast, dream, and plan. I'm not saying that. But what you do is you get a vision of where you may want to go, and then you let go of that vision and you focus on the moment and you make your decisions now. That means now on what makes sense financially. And many times you'll hear people talk about a manifestation. Go in where you want to go, make a decision, see it, and then let it go and live today as if it's coming. I did not hear talking about personal manifestation, but I'm saying it follows the same thing. In my summary is I'm seeing too many people believe they got to be something because their ego or the social circles they're within or read about say they must. So they think, okay, I got to start a company and then it's got to give this much to charity and then it's got to go public and then it's got to do this. I always say, take a breath. What could you create today that will give you the income to experience your life and you will thoroughly enjoy doing it? That's where you want to start. We're going to expand upon this concept in the next couple sessions, but I just wanted to give you some food for thought, no pun intended, right before the Thanksgiving holiday. I got one webinar I'm doing yet till the year end. I'm not going to repeat my financial series until January. So I've got my legal structure and tax advantages. And for the upcoming shows, we got no show next week. After that, we've got Dahlia coming on DF accounting. And she's going to talk about accounting set up your accounting processes internally and different aspects around setting up your systems of accounting, whatever the systems may be, independent of that. And then in December, I'm going to have Simara come back on talking about HR. I've got Alex Valkas coming on talking about AI. We're going to go through a lot of things that you want to talk about and consider year end to start planning in the next year. So that's kind of my focus as we get closer to the end of the year, to bring some of these things into our vision and understanding so we can start preparing for 2024, because 2024 is going to be right around the corner. I seen just a comment in the chat. I just see one, Mary, saying new 2024, it's coming here. Let's make it a great year. So now for today's show, we have someone that I just love having on the show. Has been on it many times. Clarissa Wilson is the owner of Nerdy Number Lovers, which I love that LLC. Nerdy Number Lovers is an accounting firm that works with small online businesses to make accounting and bookkeeping as easy as possible. Clarissa works with her clients to make sure their accounting is done correctly and the owners understand their numbers. I've asked Clarissa to come on the show and share her wisdom with us once again. Clarissa, thank you so much for coming on the show.
Thank you so much for inviting me.
Okay, I know many people have heard from you before, but I want to just at least start out a little bit with your bio and explain your background and understanding and how you came into having your own firm. So people know, I always say as I give expertise, I like people to know my background just enough to know where I got my expertise from that I'm sharing. So let's start. Tell us a little bit about your background.
So I actually started accounting when I was in 10th grade in high school because I just took a class and I loved it. So I went to undergrad to get an accounting degree. And then I was working full time and I was bored. So I went and got two masters, both while working full time, both with a concentration in forensic accounting, which is fraud. And I thought I wanted a job with the government. So I worked as a government tax auditor for 6 years. Partway through that, I found out that I actually hate that job because I hate how the government treats the small business owners.
Yeah.
So I started doing the complete opposite of what I was doing as an auditor, with helping small business owners make sure that their accounting and their bookkeeping was correct before the government would come in. Because if everything's correct, then an audit is going to be super easy. So you can't really prevent an audit, but you can make an audit go easy.
Yeah, that is so true, Clarissa. And thank you for sharing that. And I agree with you. I have always said that I want to be on the side of the small businesses. And I always equate it to the fact that I tell people on the show all the time, I grew up in a small country town. I was podunk and didn't even know it. You know, I was like so far in the country. And all of the things I was around was small mom and pop. So I have a just intrinsic love for small companies. And as I got back into, business and kind of developed and got into a lot of high profile situations, I realized how unfair the small businesses are treated by the government. And I mean unfair because they're treated as if they have the same knowledge and staffing that a big company would have. And know of all the same regulations, and they can't afford that kind of expertise, but they kind of keep everything even, like you should know the law and you should have this. And I think one of the things you said about making an audit easier is the key to that. And so on that, I'm going to go on a little side note, is when it comes to filing documents, tax documents, etc., a lot of times people think that if they have a CPA sign it, that they're safe, that the CPA is responsible. Or if they have an outside bookkeeper sign it or an outside somebody sign it, they don't realize who actually is responsible. And you've been in the seat of understanding that. Let's talk about that for 1 second. Yeah, chat on that with us.
So it doesn't matter who signs it. At the end of the day, you're the actual taxpayer, you're the business owner, you are 100% responsible. Yes, if there are errors, it can kind of go back onto the tax preparer, but what's going back on the tax preparer is now everyone that they have filed a return for is now being looked at as well.
Yep.
So they're still not responsible for what was wrong on your end. They're just responsible for possibly having a whole bunch of other people be wrong too. It's like we were talking before the show, most CPAs nowadays, you give them your financial statements, they're not looking through and making sure that they're correct. It's on you to make sure that they're correct before you give it to your CPA to file your tax return.
And this is right on point. I know we were going to talk about it. I was thinking near the end, but let's chat about this now because this is a key thing to understand. So once again, I always say I'm old, so I say back in the days. But back in the days, and especially with me having had the same tax preparer for many years, he has an understanding of about where my numbers are going to be. He meets with me before. I do a lot of my own stuff myself, right now because I'm able to, but he would be able to quickly notice if suddenly the revenue was different or something was different about it and ask me. This is no longer the case, especially in the small business world. I feel like, and I'm not saying anything against tax preparers or anything. I'm saying this for the business owners to be alert and be aware. When you hand over your financial documents, I feel like many tax preparers are acting more like data entry. They're just taking the data and entering it into the form. And I'm seeing a lot of really scary things, such as taking out a loan. The business owner put it in the wrong category, saying it was income. The tax preparer didn't pick it up. So in essence, what actually happened, the business owner took a loan because they didn't have money, and then they paid tax on the business loan.
Mm-hmm. So there is that, and I'm also seeing where the business owner is doing the bookkeeping, but they don't 100% know how to do it, but they're not outsourcing it to make sure that it is done correctly. So they will put credit card payments as expenses. They will put loan payments as expenses when they're liability payments. They're not an expense. And I have clients where I explain this same situation to them almost weekly because they don't get it. They're like, but I'm putting all this money out, it counts as an expense. I'm like, no, it counted as an expense when you bought it on the credit card. The payments don't count as an expense.
Yep, exactly. In fact, I seen somebody actually set up a chart of accounts as a credit card, plug in all the credit card numbers, and then when they went to sell their company, the broker looked at it and said, "This is wrong," and they sent it to me. "What's wrong with that?" I go, "There is no expense called credit card. It's what expenses were paid with the credit card." So that brings us to a point that we want to discuss with detail. So we're going to discuss QuickBooks Online. Clarissa, you're an expert at QuickBooks Online. I am not an expert at QuickBooks Online, QuickBooks in general. And I want to be able to walk people through some of the things that they should consider and some of the things that they should do to make sure that their data is accurate before sending it to a tax preparer or anything else. And let's start with the syncing of the data. Now, I'm going to say it this way, and I'm going to let you go with it. In my opinion, QuickBooks wants everybody to believe you just sync the bank account, you sync the credit card, and then you go, "I'm done. I've done my accounting." And in my mother's old words, German family, it all runs amok, And so I really want to emphasize that they're being sold a book of goods, that QuickBooks or any accounting process is that hands-off and mechanical. It's not. So let's start with the syncing of the data. I'm not going to be against it like I normally am. I'm going to be, okay, let's support the ease of syncing the data, but let's do it right. Take it from there, Clarissa.
Yeah, so you do want to sync it because that makes sure that everything that actually does go through your bank account is showing up in QuickBooks. But once you sync it, it shows up on one page in QuickBooks. It has not yet made it to your financial statements. You have to go through transaction by transaction and make sure that it's going to the right income, expense, asset, liability account that it should be going to, so that it shows on your financial statements correctly. QuickBooks will suggest accounts that they think it should go to. Sometimes this is correct. Most of the time it's not. I mean, I have over 20 clients that I have in QuickBooks, and I do all this for them where it's not always correct. I'll have one transaction that'll be correct. The next transaction is the same thing, and QuickBooks is saying that it should be something else. So you have to go through line by line and make sure that they're correct. And this is why I say do not turn on the auto add rules, because then you're not seeing every transaction, because QuickBooks will read this transaction. Oh, this matches the rule. So they're automatically going to put it into whatever account you set for that rule.
Gotcha.
And
So
it may not be correct.
That's the button that you have to turn off, is those automatic rules, right? And
Yes.
and true, I want everybody to hear what Clarissa's saying. She's saying independent of whether you think it's correct or not, you're checking it. So you're literally going line item by line item and line item to confirm, because I'm not aware, not being somebody who is working with QuickBooks Online with a bunch of clients, how much it messes up on the technology aspect. But I also know that it could be it seen income, which was a loan, like I expressed earlier, and it sees it as a payment from a customer. So we've got two things happening. We got a technology concern, and we got you should change the category, which if you were doing it manual, by default, you would have analyzed it and done it accordingly. So in the olden days, when we would do it, we were looking at each of the entries and we were making a mental choice based on our knowledge of where it goes. We need to engage in that same behavior, but just let QuickBooks being the data entry to bring that information to our face to make that decision. Is that a good way to say that?
Correct. The syncing is the data entry. So that's the only part that you can make it easier on yourself, is by having it synced into QuickBooks, so that you don't have to go line by line and enter them hand by hand every single time.
Gotcha. Now, this one I'm going to ask, and I may be asking something that's just a little too confusing to even explain. It's more of a one-on-one, but it was something, Clarissa, that you brought up to me last time. And once again, because I don't use QuickBooks Online, I wasn't aware of it. And it had to do with the transferring of the money when you make the credit card payment, so it doesn't double dip it, or that's the way I kind of understood it. I'm not even understanding enough of what you said to say it correctly, but I can get you in that ballpark. Since you told me that, I looked at a couple people's financials, and I saw a weird thing with the bank being decreased and then it being decreased differently in another area. And I thought, that's what Clarissa was talking about. This might be happening more than we think. Is it something you can give somebody at least a good idea of what I'm saying here?
So we're talking about how you have everything synced into QuickBooks. So you would have your credit card synced in so that it's pulling all of your information from your credit card. You would have your bank synced as well, so it's pulling all of the information from your bank. Now you make a credit card payment from your bank. So the money's going out of your bank, and then the way that QuickBooks sees it, it's going out of your bank and into the credit card as two transactions.
Okay.
It's really only one.
Yeah.
So one of those transactions, it doesn't usually matter which one, but I have been finding that some of them, it does matter which one you do first. And this is where it's going to be trial and error, because I can't tell you, it's not the same across all of them. You would go into one, so let's say you go into the bank account, you would say the credit card payment, you would mark it as a card payment and select the card that you're paying, and then you would hit add. And then you go into the credit card transaction activity, and you would find that payment, and there should be a match button instead of an add button because it has already matched to that payment. If you don't do a match and you hit add on both sides, you're showing money going out of the bank twice, and you're showing money coming into the credit card twice.
Yep. That's exactly what I thought was happening, because I looked at somebody and I looked at the balance sheet, which let's just chat about that in a second. I looked at their balance sheet, which that's the tell-all to me. You know, I'm able to at least identify if I think there's issues. And they had this huge amount of negative on the bank and a huge amount on the credit card. And I thought, that is maybe what is going on. So I get it. If you don't do a match, you're actually deducting twice. Let's talk in that about the balance sheet. And I find that most people don't even look at their balance sheet, which will then be able to springboard into different reports and reconciliation. But while we're here, and I tell people, if you've got the QuickBooks version that has a balance sheet, because I know a couple of versions don't, pull it up and look at the balance sheet and identify if any negative numbers are where they should not be, to at least get an indication that there is an issue. And I always tell people that what's on the income statement may be affected by the balance sheet depending on the business and the accounting. And so they think, well, the balance sheet's wrong, but the income statement, these are interconnected. So can we talk about why people should look at their balance sheet, and even if they can't read it, what they should look for to just give them an indication that there could be some issues?
So the easiest thing with the balance sheet, if you're looking at it, 99% of the time, you should have no negative numbers on your balance sheet. So if you see a negative number on your balance sheet, that is a very good key that something is wrong. There are some accounts that, yes, you will have a negative, but that's why I said 99% of the time. For small businesses, you won't really have many negatives at all on the balance sheet. If you do, a very good sign that it's an error.
Yeah.
So yes, there can be transactions though where only the balance sheet is wrong and the income statement is correct.
Yep.
Because this is what we were just talking about with the credit card payments. So that's only with the credit card payments and the bank being wrong, that's only balance sheet. So your income statement is correct.
Yep, exactly.
So there are times for that, but the biggest thing is looking for negative numbers. You shouldn't have negative numbers on any of your reports.
Now, I want to get into the specific account reconciliations, but while we're on the reports, I'm going to tell you what I always did as a CFO, overseeing big companies. And it was a little bit of me being an interim CFO, seeing it from afar. So it may be a little bit of an overkill on what small companies should do on a regular basis. And then you cut down from there. So what I would constantly be doing is remember, these are companies that have software programs that you have to close out the month officially, right? So what I would do when I came in to check the departments, I run a P&L, a profit and loss statement, and I make them run it before they close out the accounts. Then I make them run me one after, and I look at it just to see if things make sense. And I look at every account, and I'm not looking for anything specific, but if suddenly the payroll does something weird where it doubles and I know it shouldn't, I'm just eyeing it to make sure. And I think that is a crucial thing because one, it gets people familiar with their numbers. Two, it helps them to understand where the numbers fall on the statements after they do the transactions. So that's what I would do on a, kind of a very strict level, overseeing controller and accounting departments. And that's how big companies work. How should a small company take what I just said and apply it to what they should do? I know you always understand exactly what I'm talking about. So go with it.
Because I do the exact same thing that you're talking about, even for small businesses. And since I'm in there almost every single week for most of my clients, I know what the numbers should be like in my head before I even look at the reports anyway. So you still want to look for like something that will stand out, because a key that something can be in the wrong account is, say one of your expense numbers is super, super high this month, but last month it was $500. This month it's $2,500. Did you actually spend that extra $2,000, or is something classified miscorrectly? So those are things you're going to look for, like negative numbers and something that's completely drastically different from last month.
That's perfect.
Lamar, accumulated depreciation is one of the only ones that should be a negative number on your balance sheet.
Oh, you're seeing some. Okay, gotcha. You're seeing some in the chat. Perfect. I didn't even see that. I'm like, oh, yeah. And in that, I think that it's kind of getting away from this mindset that I sync the data and I don't look at the financial reports. It's getting a habit of always looking at them. And if you are pulling up your own personal numbers on a monthly basis and looking at them in comparison, you will quickly know if you spent that expense. Where I had to go to the department and say, is this number? I didn't have that knowing, right? So anybody that's looking at their own numbers has a more visceral understanding. So just the act from where we are so far, we're going to keep going, guys, but just the act of looking at every transaction to make sure the category is being chosen correctly, double checking that you're not, we call it in finance, double dipping into your credit card and your bank statement, and then pulling up a profit and loss statement before and after you do any kind of activity in your account, and seeing the comparison and making sure nothing stands out, and looking at a balance sheet for negative numbers. We are already a big step ahead of the game. Now let's launch from there into monthly account reconciliation. And I know there's a whole lot to talk about that, including why the button keeps moving. So you take it from there, Clarissa.
Yeah, because Lori had actually asked me to do a screen share on this, but in the past like 3 months, QuickBooks has moved where the reconciliation button is, and it's still not all in the same spot. So once you do the syncing and you put all of your transactions into the correct account, then at the end of every month, when you get your bank statement issued, you're going to want to go to the reconcile button wherever it is in your QuickBooks and actually reconcile your account. So you would put in the ending balance and the statement date, and then you would do the reconciliation. If everything is correct and you're not adding a whole bunch of extra stuff into your QuickBooks, this reconciliation will be pretty simple, and you will have a zero difference balance at the top. So you can just go through, and QuickBooks will already check these if you're doing the syncing. And then if nothing's wrong, it'll be a simple thing to do this bank reconciliation. What if you have errors? You're putting your own transactions in, you're doing things like not matching your credit card payments. Then you're going to have errors and you're going to have to uncheck everything that QuickBooks checked and literally go line by line through your bank statement to check each transaction to get to the correct balance. Now, I do want to add that sometimes, this doesn't happen very often, but sometimes QuickBooks will have an error and it won't import, say, 1 or 2 transactions. And this is how you find them, is by going through the reconciliation. Because what the reconciliation is literally your checks and balances to make sure that every transaction that went through your bank shows on your financial statements.
Perfect. See, and I know all this from CFO. I don't know it as far as how QuickBooks Online does it. So it's great because I can chat about something and then you're telling them the mechanics. I want to follow up and just say to the audience, this reconciliation, in my opinion, is crucial. In fact, when I was talking a minute ago where I said to close out the accounts in the larger accounting systems, you cannot do a single transaction in the next month until you close the accounts out. That is called a true accounting system, and it forces you to do the reconciliation to make sure the books are correct before you go forward. QuickBooks does not have that requirement, allowing you not to do it. But here's the thing, and Clarissa, this is something that's driven me up a wall on trying to fix QuickBooks desktop reports, is that if you don't reconcile, you may have transactions that occurred on the P&L incorrectly the year previous, and then you're trying to fix them. So it's one of those things that if it's the month, not only do you remember it, but you've got less effort you got to go through to fix it. And you do not have to, I'm going to say do not have to again, so people hear me, worry about the tax report being incorrect. If you're suddenly trying to fix an error and you realize it's multiple years, you got to figure out whether you have to amend tax returns. So you want to catch this, nip this in the butt, as they always say, right there when it's a monthly report. And I get what QuickBooks Online's doing from your description. It's making it real simple because in desktop, if you're not syncing, I shouldn't say desktop if you're not syncing, I should just say if you're not syncing, you got to check each one. It's checking the ones it knows to be true, allowing you to see the ones that are not. But if something's wrong, you got to go through more of a manual process. So seriously, if you reconcile your accounts on a monthly basis, you've got a better opportunity to catch it while it's still easy to fix. That's the key. Okay, so now we've checked our information line item by line item. We checked all the other things. We reconciled on a monthly basis. What other reports or reconciliations in QuickBooks should we be aware of? I think we got them, but I just want to ask that. Is there anything else you do to check numbers?
No, I really just go through this thinking of the data and send everything through to the financial statements that way, and then review the income statement and the balance sheet. Because like we said, most businesses are cash basis. So the only other financial statement that's really out there is a statement of cash flows. When you're a cash basis business, the statement of cash flows doesn't matter. Just look at your P&L, that's your cash flow.
Exactly. In fact, you know, to that end, I tell people this all the time, that when, and I want to say this again, and I say it mostly in my financial literacy classes when I'm teaching them how we have to extract the data and put it in an Excel document and turn it into the matching principle of cost of goods to revenue to even know if we're profitable. So I was just saying what I'm saying so you understand, so you know where I'm going with this. When somebody looks at a company's profit and loss of a 26 million or less, that's where the IRS identifies it must be reported on a cash basis. They need to hold up the profit and loss statement and say, if it's a positive number, more cash came in than went out. If it's a negative number, more cash went out than came in. What you cannot do is go, oh, we were profitable, because that's a misnomer. Because if you bought inventory and you paid for it all, it's going to show up on the income statement, but that does not showing you whether you actually are profitable on the individual sale. You want to extrapolate on that, because I'm really trying to pound that into people's head. And then if you want to, Clarissa, you can go with my, you know me, my pet peeve, why you must know your gross profit margin with your real cost of goods. Go ahead, take it from there.
Yeah, it's one of my own pet peeves too, where they're like, but I spent all of this money, but did you sell all of your inventory? Like, most of your inventory is on your balance sheet until you sell it.
Right.
So it's not going to show if you're profitable or not until you actually sell it.
Yes.
And yeah.
And one of the things that a lot of times people don't realize, and I speak about this quite a bit, or I shouldn't say even, I should say when, I don't even want to put the word even in, when, and as I am a CFO for bigger companies, even with these elaborate accounting, true accounting, close out the months, POs, cost of goods, accrual, I still had a ton of separate Excel documents to manage the company, because that is under managerial accounting, where I'm extracting the data to identify what I need to manage. I talk about this through my financial literacy series. When you're looking at your financial statements in whatever accounting system you use, you are just looking at your financial accounting. You're looking at a cash basis. So every small business should have separate documents that help them to manage the financial profitability.
Yes. Like, and most small businesses, they use their bank account to manage their profitability. The amount in your bank account has nothing to do with your actual profit.
Oh.
Because I have had a couple clients that actually come to me and they're like, my P&L is telling me that I have a, let's say, $50,000 profit. I have $5,000 in the bank. Like,
Yeah.
why? Like, shouldn't my $5,000 in the bank be my profit? No. Like, because like I said, if you're buying inventory, that goes on the balance sheet, not your P&L until you actually sell it. So you're putting all this money out for inventory, but it's not going to affect your profit until you actually sell it. And that's one thing that, if you're not versed in accounting like we are, it's very hard to really grasp it, that the amount in your bank account is not your profit.
Nope.
And that is not what you're paying tax on. You're paying tax on the profit. So if your bank account says 5,000, but your profit says 50,000, you are spending way more money than what you're bringing in, because you're probably using credit cards, you're probably using loans.
Yep.
And you probably have inventory that you haven't sold, or
Yep.
you're not doing your cost of goods sold correctly.
Exactly.
We have that. That's a big issue too. Not doing your cost of goods sold correctly, but
Yep.
that'll be a whole different show. We can't really get into that.
I know, and that's what I talk a lot about in my financial literacy series. And so a way to look at it, everybody, is that when you're putting the data into QuickBooks or whatever you're putting into it, because we're going to talk about whether to use QuickBooks or not in the next thought. But when you're putting the data into an accounting system, this is the way I like to look at it. You're putting the data in, organizing it properly to be able to fill out a tax return or a government document, or show a document to an investor if you have to. But to manage your company, to know you're profitable, then you are using other documents with a real-time understanding of, I sold this much, this is how much it cost, etc. So if you don't have any documents in your company other than your accounting, you're missing out on a whole way of managing your company, and you're losing out on doing what I call course corrections throughout the time period when you see you're not going in the direction you want to go. Course corrections is my new favorite word that I use. But making adjustments to the decisions you're making. Now, when it comes to QuickBooks, and this is one of those that I know you're concentrated on QuickBooks, but I'm going to ask you just if you know anything. You know me, I got a love-hate with QuickBooks. I really do, Clarissa. It's like, as much as I love it, I hate the company. I really do, for many different reasons. And I have QuickBooks Desktop, and I just went through this thing. I do this all the time. I just switched over a Mac. They want all this money to have it on the Mac. I'm like, okay, do I keep my QuickBooks Desktop on my other PC and still use it there? So I was like, okay, I'm going to look for a new solution. I hate this company, right? So I go all involved and I look at all these different ones. And I didn't look enough in depth, so I'm saying this from a lack of knowledge, but all the other competitors still are not following enough of the accounting processes other than maybe, I think it was Xero or something. I'm not going to get balance sheets. I'm not going to get financial statements. They do cool little cute things. Oh, you can pay from the PDF or you can send this off, but these are not accounting things and it's not giving me the standard. Does QuickBooks still got me?
QuickBooks and Xero.
Yeah,
Where
I was right.
So I work with QuickBooks and Xero for clients for both of them. Xero because it's cheaper, but, and I know we've talked about this before, Xero has a much bigger learning curve if you're not an accountant than QuickBooks does. QuickBooks still has a huge learning curve if you're not an accountant because these softwares were made for accountants.
Yeah.
So there's still that huge learning curve, but those are the two only ones, because like you said, they have come out with all of these special effects, I guess you can say.
Good word.
Pay from the PDF with a link, or like, oh, well, you just need this report because it shows how much cash you brought in, but it doesn't give you your whole P&L type of thing. Like, these are out there because people don't know what they need for their accounting. Like,
Yeah.
They don't have an accounting degree, so I just need a way for people to pay my invoice. Okay, but do you have all of your bookkeeping, not just how much money you're making?
Yep. Yep. Exactly. That's what I'm seeing. And that's what I came to the conclusion. It was QuickBooks or Xero. That's the only ones that even mimic close to a true accounting, which is needed. Because I always tell people, you have to realize that whatever you have in your accounting software, whatever it is you're putting on your taxes, and you can get audited and asked to show these information. So it's not like people are go, well, I just do it and then it's done. And then I do my taxes, it's done. In the IRS eyes, you've got 4 years if it's a payroll or 3 years if it's not, that you can be audited. So, and if it's a fraud concern, it can go on forever. So you really have to, consider this. And Quicken is not a accounting software. That's just for personal. I just noticed that sometimes I don't see the chat because there's too much going on, but Quicken won't work. But let's get a big but here, Clarissa. Okay, this is the other thing I say all the time. This is, and you feel, like, you can always disagree with me on this, but I feel as though many companies they have more justice done if a properly set up Excel document where you've got separate tabs for sales, cost of goods. I use drop-down boxes. So I'm not talking about a piece of Excel where you just throw a bunch in, but a well-organized Excel document will do much better for people, because I look at it this way. It has to be accurate. The IRS says accurate, does not say QuickBooks. It has to be accurate. But I found if it's not efficient and you don't do it consistent, you lose accuracy. So if you don't understand the software, you're confused, you're not being consistent, you put it off till you're too tired and then you do it when you're exhausted. A Excel document is at least static. It's right in your face and it will work just as well. So I think that for a lot of people, if you're not going to go to any software, an Excel document planned out properly, which I help people set up a lot, is sometimes the better solution.
Yes. And I have an Excel document in my bookkeeping toolkit. I actually have 2 toolkits. I have a regular one that's a toolkit, the bookkeeping toolkit, where it just teaches you how to do bookkeeping and has the basic bookkeeping spreadsheet. And then I upgraded it because I had people asking me that sell products. And I didn't want to include all of that in the main one.
Yep.
So I have 2 versions. The second one is the bookkeeping toolkit for marketplace sellers, and it has the cost of goods sold calculation in the spreadsheet as well. Plus I go over inventory in that course.
Oh, perfect. And we've got Clarissa's information in the chat. So please look it up, look up the tool books, everything that from there. Now, Clarissa, I want to go on this one. So I have so many times where people, and this is another pet peeve I got, I'm going to say it this way and you'll know where to run with it. People are hiring bookkeepers thinking they're safe and secure now and they spent the money, when they're really hiring just technology people that understand the software, not bookkeepers. You know what I'm talking about. Give the people the good, bad, and ugly of what's going on in the small business world when it comes to bookkeeping.
Right. So, and it's not just the technology people. It's also people that see a Facebook ad where bookkeeping is the best stay-at-home job and people want these remote jobs. Because I even had someone contact me who is a copywriter saying she was also sent these ads where like bookkeeping it's so easy to learn. It's not that easy to learn if you do not have an accounting degree. So you want to make sure that whoever you're hiring to help you with your bookkeeping has more than just an education in QuickBooks or Xero or whatever accounting software you decide to use. They have more than just a bookkeeping course where this course has said, oh, you can make a living being a bookkeeper and we'll teach you how. And if you start working with one of these people and then you go and look at your financial reports and you see things like uncategorized asset, uncategorized revenue, uncategorized expenses, ask my accountant.
I was
You
just
see
gonna say,
those
yeah,
accounts,
Yeah.
this bookkeeper does not know what they're doing.
right.
Because you should never see those accounts on your financial statements.
Nope. And I
Because
see
they are
those
not normal
all
accounts.
the time and they drive me up a wall. Or
Yes.
what I see, Clarissa, is I know somebody didn't do the setup correct because I look on their balance sheet and they got open balance equity and they got a negative number. I'm like, how do you start a company with a negative number? You know, and I see that constantly. I know they're not updating the information correctly. One of the things, and guys, while I'm still talking, if you have a question and it's in the chat, throw it in the Q&A. I'm going to have Clarissa answer a few questions, and I don't always see them in the chat because so much going on. So if I'm missing it, throw it in the Q&A because that's the box I'm looking at. So Clarissa, let's make mention of one thing that I know is my little pet peeve, but I just want people to know about it, that, and I'm going to say it and you correct me, but I believe QuickBooks Online still has the situation that if you don't pay the subscription, you lose the data. And so you kind of become almost, you know, held prisoner by the subscription, because even if you try to go to another place, you're going to be able to take your P&Ls, you can run P&Ls, but you're not going to have your original input data. Is that still correct in QuickBooks Online? By the way, as I say that, correct me on this too. I looked up Xero because that was like my key issue. And I thought I saw something like they kept it live and able to react for like 7 years or something. They were a little bit different on that.
So I know QuickBooks, I don't know how long, but I know it's at least a year. They will keep your information active. So even though you're not paying, you can't go in and you can't make any changes in it, but you can still pull all of your reports from QuickBooks. And I know that because I've had a couple clients who canceled QuickBooks, or they just lapsed on their payments, like say they got a new credit card or whatever, and QuickBooks couldn't charge it. So their QuickBooks was completely frozen, but we could still go in and download reports.
Yep, I remember that now that you say it was a year. And of course, me being a tax preparer, I was like, but that's not 3 years. Yeah. And then I noticed Xero was a little bit longer, which, this is 7 years following the IRS, which makes sense because Xero is more of a CFO accounting software. That makes sense. Okay, we're going to go into a couple questions in the Q&A. We got some of them because we talked about what are the financial reports we should monitor. We got that down. So we got Mary. Tara says, if I make a purchase for a client and they reimburse me, is it accurate to include the purchase in my expenses and the reimbursement in my income? Let's chat about that one. That's a very interesting question. I know you. Yep. Go.
She actually has it 100% correct. So
Yep.
you would put the expense into an expense account, and I usually will label these expense accounts. So say you're buying something for your client. So say client software expense. So, and then your business software goes into another software expense account so that you know that it's something that you're paying for your client. And then, yes, it would just go into income. It doesn't matter this is where it's a personal opinion. If you want the income completely separated out, so say reimbursable income from clients or something like that, or you can just lump it all into one main income account.
Yep. Now on that, Lisa, I would tend to, and I'm not saying I'm right or wrong, because a lot of these are choices, but me being CFO-ish, I'd put it under other income. Because
It
just
can go under other income too.
you know, this is an option because for me, it's not
Right.
part of the main business model, but then I guess the expenses in there.
But it
So
also depends, so I'll actually add another argument to that. It also depends on if you are only billing them for this expense, or if
Yes.
you're billing them for a service plus this expense, then I would just lump it all into the one expense.
Yep,
Or the
nope,
one
I
income
agree with you
account.
on that. I totally agree with you on that. Oh, this is funny, this question from Anonymous, because we were chatting about this right before the show. So this is perfect. You would think we pegged this. Do you have any tips for selecting a specialist? I wasn't even going to bring this up. I forgot about it, but we were talking about this. So tell us about what your master class.
Yeah, so I did a free masterclass in October, and it actually goes through ways to help you hire a bookkeeper, an accountant, and a CFO. So it is still free, but it is currently not set up. You can still sign up, but it is currently not set up where you will automatically get the replays if you sign up today. And I will actually type the link into the chat. You can still sign up, and I will, sorry, I can't type and talk at the same time.
Oh, there you go. Awesome. Thank you so much. Well,
We'll send this. Remember to fix everything to send the actual replays when you do sign up to that sometime today.
perfect. Well, you've got a lot on your website, a lot of tools, and not only that, they can reach out to you for bookkeeping services as well. I always am going to have you back on because I always tell people, you know, and this is just Lori being Lori, when it comes to bookkeeping, I don't like many people. I just don't think, because I'm used to the higher level, really knowing what they're talking about bookkeeping. So when I go into the smaller companies and I meet these bookkeepers and I ask them questions and they can't answer it, I'm like, I can't refer you to somebody. I can't even have you on the show because you don't have the background of my level of comfort. And like I always tell people, I met Clarissa through a client and I started talking with her. I'm like, oh my God, a bookkeeper for small businesses that knows what they're talking about. This is unique. So that's why I always have you back on the show. So any last comments that you want to make? I think I got one more question, and let me scroll down. At some point, should you hire another accountant to check your current accountant? Oh my God, that's hilarious. I would say the answer is possibly no, but yes, at the same time. Clarissa, that's a funny question, Lamar. It's an excellent question. I'm not laughing at you. It is an excellent question, and it's just so apropos of today. Clarissa, I'll let you take it.
I actually have a mixed opinion on this because I actually think that you as the business owner should be the one that's checking. Now, I understand that you guys don't know accounting, so it's not always going to stick out to you like an accountant, like it would for most accountants. Because we have discussed that there are a lot of accountants that are not checking other people's work. So you should have a bookkeeper, and then the accountant should check their work, but not all of them do. And then, like I said, you as the business owner, at the end of the day, are the final checker.
Yep, you absolutely are. And that's why I had to laugh, because it's such an interesting question. And I believe that way as well. I think that one of the things, and I have conversations I have with people on how to choose a good tax preparer. When you ask questions of the tax preparer and you aren't understanding them, a lot of times then people say, okay, I just don't have the intelligence, or I just don't know. And they bypass ever asking questions of their accountant again. I'm sure you've experienced that. And I always tell people, your accountant, and I'm a tax preparer. I look at this for myself as well. Tax preparers must be able to communicate to a client in a language they can understand, so they fully understand what's on their tax returns. It is that tax preparer's responsibility. So if you don't have a tax preparer that you can communicate with effectively, I think it's time to get another tax preparer. I just wanted to add that, because I know we're talking about communication, but I think when you don't know a subject, your ability to communicate with the expert who knows the subject on your behalf, whether it be a doctor or a tax preparer, is key.
Yes. Yes. So Lamar, that actually, that depends too. Should the bookkeeper be a different company than the accountant? So it doesn't always have to be a different company, but it should be two different people.
Yep. Yep, absolutely. Yeah, because otherwise you have no redundancy to check anything.
Yeah.
Okay, believe it or not, we are up at the hour. You know, I'm going to be back in touch with you, Clarissa, to have you back on. I can tell from the involvement in the audience, this is just always information that needs to be discussed. And I always say, we need to, and this is my 2024 wish upon everybody in the audience, take back your power. Take your power back financially, take your power back personally, know your numbers, create companies that fulfill what you need, desire, and want, have control, sleep good at night, and be happy. Clarissa, any last words you'd like to add?
Anthony just asked another question. So if you go to the financial gibberish link, I actually go over the answer to that question in very much in detail in the recordings. So I already have that explained in a video. So
like I said, you have a lot of resources out there. You do. You are a huge proponent for small businesses in this area.
yes.
Okay, guys. Clarissa's coming back. I promise we're going to get a date. I know you're going to still get more information, more questions. We can go on forever. So guys, you got to get back with us. And as well, Sadie, she's coming on in a second here. Sadie, make sure they have Lauren's email address, because if you have additional questions that didn't get asked, send them off to us. We'll get them filtered, send them to Lauren. So with that, I'd like to welcome Sadie. I know you're saying Sadie. Okay, Lauren started. Sadie's closing us out because of the fact that Lauren had to go into a meeting. So Sadie, hey, can you close us out and make sure they have Lauren's information to be able to communicate further with questions?
Oh, definitely. Well, I mean, I learned lots. I'm not even gonna kid, where I was like, yes, let's have this wonderful information. So I enjoyed myself. And if you guys look into the chat window right over there, if you want to connect with Lauren, or if you want to do a meeting with Lori, please check out the chat window, lsimpson@lbcc.edu. I know it's not a hyperlink, so I'm just vamping a little bit, so it gives people enough time to copy it, because I know with the hyperlinks, you can just click, email. Zoom just does not do that. So there we go, lsimpson@lbcc.edu. You guys have a wonderful holiday. Whatever that you celebrate, like I said, you know, let's celebrate the fact that we are alive. Let's go with that one, right? Gratitude for life. So on that note, any last words, Lori? Anyone before we turn off this little wonderful meeting?
Not at all. I want to thank our audience, our frequent flyers that are there every week, and those that are having great conversations in the chat for being here. Clarissa, thank you again. I know many will reach out to you and you will help them as well as you can. I know that, and we're going to have you back on the show. And so I want to just thank everybody. Clarissa, thank you for being here, and thank you for watching Small Biz Talk with your host, Lori Williams. Enjoy the holiday, enjoy the time off, and we will be back again right after the holiday, where we're going to talk about setting up different accounting systems. So we're going to continue this vein of thought in a different perspective. Bye, everybody.
Bye.